Hi, my name's Joe Achaturo. I'm a certified public accountant, and I'm going to teach you everything you need to know about doing your own taxes. So let's get started. All right, let's talk about income. Taxable income, non-taxable income, ordinary income, long-term capital gains, short-term capital gains. Let's take a look. This is how we're going to set up this little course today. We're going to do taxable income and non-taxable income. Under taxable income, we're going to go over ordinary income, capital gains, and collectibles. So let's take a look. What is taxable income? First, in taxable income, we're going to go over our ordinary income, right? For the U.S., by the way, taxable income is any income earned anywhere in the globe. Now, there are going to be certain exemptions because there are certain treaties involved with certain countries. I'm not going over that. Way too complicated. But let's look at ordinary income. Generally, so the rates are going to start at a minimum of 10%. As your income increases, the tax rate at which you are taxed goes up as well. Right? So what qualifies as ordinary income? Wages, salaries, tips, commissions, bonuses, FMLA payments. Right? You just had a baby. You're getting FMLA payments. That's taxable. Right? Pass-through income from LLC or partnership. Are you self-employed? That's taxable at ordinary rates. Interest earned. Now, there's an exception. EE bonds. State and municipal bond interest. Not taxable on federal, but may be taxed by the state. Next, dividends paid by a company whose stock you held less than a year. That counts as ordinary income. We're going to go over that later as well in capital gains. Cancellation of debt. This is mostly going to any cancellation of debt other than usually like your household. So if you had a mortgage and you had that debt canceled, there's currently a tax break in which they don't count that cancellation of debt from the mortgage of your personal residence as income. All other cancellations of debt, like credit cards, are income. You'll be getting a 1099-C if you have that income. Rents, royalties, gambling winnings, distributions from IRAs, 401ks, simple plans, KEOs, as well as most other retirement plans. Any distribution from a retirement plan in which you got a tax deduction for putting the money in, when that money comes out, you're going to be taxed at ordinary income tax rates, whatever the rate happens to be in that particular year. Distributions, again, from most pensions. Unemployment pay. Deferred compensation distribution. Social Security, if your income is above $25,000 and you're single, like so all other income, not including Social Security. So if all other income is above $25,000 or $32,000, then your Social Security becomes taxable. Annuities, there are special rules, not going over those. And then other income, the biggie being hobby income and a state tax refund if you itemized your deductions in the previous tax year. A lot of people, you'll be getting a 1099-G, right? That would be government payments to you. If those are from tax refunds and you itemized your deductions last year, then that's taxable income to you this year. If you didn't itemize and you only used the standard deductions last year, then don't worry about it. That is not taxable income. Taxable income continued. Capital gains, right? Capital gains are non-earned income, right? So income you got from selling an asset, things you didn't work for. But there are two things, right? There are short-term and there are long-term capital gains, right? Short-term, long-term. Short-term capital gains are from any assets held less than a year. And I say generally because there are special rules. Most don't apply to most people, so I'm not going to go over them here. Short-term capital gains, sales of stock, sales of bonds, sales of real estate that's not your personal residence, right? Those things are going to be taxed at your ordinary income rate, whatever it is that year. Long-term capital gains, however, are going to be from assets held longer than a year. This is going to include stocks, bonds, real estate, dividend payments from companies whose stock you held for longer than a year. These rates, these long-term rates, are going to be starting at 0% and are generally going to be lower, or in pretty all cases, going to be lower than your ordinary income rates. So the goal is to get as much income as possible to be long-term at a capital gains rate. This way it's not taxable. Now our final taxable amount is going to be collectibles. So what are collectibles? These are going to be taxed at a special rate at a minimum of 28%. The more income you have, the higher this collectibles tax is. What are collectibles? Works of art, special rugs, right? Not wall-to-wall carpeting, but special rugs. Basically what you would consider an antique rug. Precious metals, antiques, gems, any other collectibles such as anything rare that's gone up in value, right? Older cars, Mickey Mantle rookie cards, things like that. So what's non-taxable? What is non-taxable? Interest. Certain interest is not taxable. If you bought state bonds or your municipal bonds, meaning a town or county bonds, the interest paid on those are not taxable to your federal government, right? Your federal tax for your federal income tax return, state bonds interest are not taxable. Same thing with town. Now, if you bought state bonds, the interest on those state bonds are going to be taxable on your state, but not your federal. Your municipal bonds are not taxable on your federal or your state. In addition, Series EE bonds used when the interest is in cashed in and the interest is used to pay for qualified higher education expenses, those are not taxable interest either. Social Security, if your income is below $25,000 if you're single, or $32,000 if you're married, not taxable. Roth IRAs, Roth 401k distributions, same thing, not taxable generally. Cancellation of debt from a personal residence only, not taxable. Inheritance gifts, bequests, not taxable. They are taxable to the person giving you the gift, not to you receiving the gift. Cash rebates from your credit card or something like that, not taxable. Welfare payments, not taxable. Most insurance payments, not taxable. Life insurance included. Qualified scholarships, generally not taxable. Some scholarships are based on you doing some work for the college or teaching a course. That is taxable, right? But a general scholarship for your courses, not taxable. You know what would be taxable, though? Scholarships that cover boarding and on-campus housing. That portion is taxable. Insurance payments, again, I went over that. Dividends from mutual insurance companies, up to the amount premiums paid. So so mutual insurance companies are insurance companies where, like, MetLife is one. So you pay in, and any excess money they return to the insurance policy holders in the form of a dividend. Those are non-taxable because it's up to the amount of premiums paid, because it's considered that you're getting a refund for paying too much in premiums. Anything over the premium amount, that becomes taxable. And finally, annuities. Annuities, again, there are special rules. I'm not going to go over those. I'm going to make a special video on annuities because they're complex. And that's it. Thanks for watching the video. I hope you learned something. Please click the subscribe buttons below. And in addition, there are links taking you to the tax software that we use for most of these tutorials. When you click on the link and you use this tax software, we get credit. When we get credit, we can keep providing you with these free tutorials. So again, if you found these videos helpful, please click on the links, help support us. And in addition, if you were to join myfreecpa.com, you could get these videos without any commercial interruptions, which would help everything move along faster. And you can actually save the videos so that they're there for you year to year as your situations either remain the same or change. And it's just a one solid place for you to find exactly what you need to help you prepare your tax returns every year. So once again, thank you and have a great day. Thank you once again for watching this video. Don't forget to subscribe. Don't forget to click notifications. On My Free CPA on YouTube, you're going to have a link to myfreecpa.com. On here, I would encourage you to sign up, get yourself an account, because you're going to be able to save all the courses I put that are relevant to you. And you're going to be able to go back and reference them year after year after year. In addition, there's going to be a Do Your Own Taxes link. This is going to be free online tax software if your income is below a certain threshold. It's basically just like TurboTax or H&R Block online taxes, but cheaper, right? This is the professional software I use, put online for individuals. I'm going to be using this software in most of my videos to explain to you how to do your own taxes. So if you want to sign up for this, please use that link. And when you use that link, I get credit, right? If you're going to do a tax return that's going to cost you some money to prepare using the tax software, because again, not all tax software is free depending on your income levels and your other circumstances, I am going to get some credit and get paid for this so I can keep putting up this videos for you. Thanks once again, and have a great day.